Hi guys, Bianca Zamora here, your favorite credit coach, and today we are going to be discussing the different strategies when it comes to purchasing a vehicle. This can apply whether it's a brand new vehicle or a used vehicle, but it's going to be definitely about the best ways to get financed and how to minimize the derogatory impact to your credit score. All right, so let's go ahead and get started. Remember, you can visit my website, biancazamora.com/credit expert to book a free consultation, or you can call our office 702-434-4414 to schedule an appointment over the phone. You can also visit my link tree and you will have access to my scheduler there and some additional services and free material. Okay, so let's go ahead and get right into it. How to purchase a vehicle with your personal credit. And again, this is to be approved even if your personal credit is not perfect, and how to minimize your impact to your credit score. So let's go over the different tiers because I think that's really important to know what tier you fall under. So with auto financing, there's about 5 different tiers. You'll have your super prime credit scores, which are between 781 and 850. These are, auto FICO scores. The best way also, I should mention, to get your auto FICO score is to go to myfico.com and purchase one of their products that will allow you to see what your auto FICO score is. Okay, so that's also very important. Now, again, going back to the tiers, you have super prime between 781 and 850. You have prime scores, which are between 661 and 780. You have non-prime, which is between 601 and 660. You have subprime, which is between 501 and 600. And then you have deep subprime credit scores, which is basically anywhere between 300 to 500. Okay. So with super prime credit scores, these are like Superman credit scores, right? Or Superwoman credit scores. You're going to receive the best interest rates. You will have, possibly even 0% interest rates. You're going to have zero or low, very low down payment requirements, and you're going to have extremely flexible terms. Okay. Prime scores are still going to get good interest rates, maybe not zero, but very low in the single digits, low down payments, maybe 1,000 or something like that, and very flexible terms. Terms would be the number of months that you have to pay on your loan. So the terms can range from anywhere from as little as a year to now I think they're going up to 7 years. Okay, and you really have to watch that because that will affect how much interest you're going to pay on that loan. Okay, so let's go ahead and keep going through what you can expect to receive depending on your score. Now, as we mentioned, non-prime scores are between 601 and 660, subprime between 501 and 600, and deep subprime between 300 and 500. Now, with non-prime scores, you are going to receive higher interest rates. Okay, so you'll start to see the double digits, right? Larger down payments, again, multiple thousands, and less flexible terms, meaning you're going to be required to make payments for maybe over 60 months. Okay, subprime and deep prime scores are going to receive the highest interest rates, which we're talking about maybe like over 20% to 30% interest. You're going to have to put a lot of money down, sometimes even up to half or more of what the vehicle is worth. And you're going to probably be in a 60-month or 5-year or longer term. Okay, so again, you're going to be paying more interest. Subprime and non-prime scores may also require a cosigner, okay, because your score is unfortunately not favorable. Okay, now, subprime and non-prime scores, I'm just going to say it, I personally would not recommend for you to purchase. Okay. And again, why is that? Because you are going to have high interest rates, which means that your loan amount will typically be higher than the value of your car once you get it, right? So your interest, let's say you get approved for a $45,000 car, let's say that's a 20% interest. So right off the bat, you're calculating your 45,000 at a 20% interest rate, you're going to be upside down right away. Okay. And that's typically not good either. Now, with the subprime and non-prime scores, you're going to have higher monthly payments, right? So instead of maybe your payment only being $300 a month, maybe now you're at $600, right? So obviously that's going to make it more difficult to pay on time. And if you're late, that's going to hurt your credit score even more. Okay. Now, if you are more than 30 days past due, these subprime and deep prime finance companies are not going to wait for you to go 60 days on your car note. They're just going to come and get your car repossessed, or they're going to come and repossess your car, which is obviously not good for your credit either. And then you may be even asked to pay the full amount at that point to even get your car back. Okay, they might not even let you pay what you owe at that point. Higher interest rates could also make it difficult for you to refinance or sell in the future, and obviously that is not good either. Okay. Now, there's a couple different ways to get approved for auto loans. One is to actually get financed at the dealership. Now, if you are financed at the dealership, there's going to be, some pros and cons with that. And you can also get financed before you go to the dealership. And that is really the key. But again, we're going to go over both scenarios and see what's the good and bad of each one. Okay. So getting financed at the dealership means that they are going to check your credit with multiple tiers of lenders, right, to try and provide you with the terms that you qualify for, okay, meaning your monthly payment, your required down payment. They're going to try to get you the best approval terms, okay? They are going to try to do that. So interest rate, the number of months of your payments, okay? And the reason why they typically have to throw you into multiple tiers is because they don't know what your credit score is. So they might ask you, hey, do you know what your credit score is? You can show them even through My FICO or something like that, but they're still going to probably throw you into one of the tiers, either the one that you think you are and maybe even the one below it. So what does that mean? That means that you're going to obtain more inquiries than is necessary, right? So instead of having just one bank check your credit, each bank in that particular tier that particular dealership works with is going to check your credit, right? This can cause your scores to drop considerably, making it more difficult for you to improve your score, or if necessary, go to another dealership if the terms that you receive are not satisfactory, right? So let's say you go to a dealership, they run 20, 30 inquiries. Let's say your score drops 20 or 30 points. Well, now the terms that they give you don't like, so now you have to go to another dealership, and guess what? Your score is now 20 or 30 points lower, like instantly, and now you're going to get even less favorable terms in the future. So how can we avoid this, right? Because obviously this does not sound good. So the way to avoid this is to get financed before you go to the dealership. This means that you're going to be pre-qualified with a bank or a lender for a specific amount before you actually even select a vehicle, or you can also be pre-approved for a particular vehicle before visiting the dealership or speaking to a salesman. The great part about this is you're going to know upfront the terms that you qualify for, meaning what is your monthly payment, what is your required down payment, if any. You're going to know your approval terms, meaning your interest rate and the number of months that you have to make your payments, and you're not going to obtain more inquiries than is actually necessary. You should only have to pull your credit once, right? This is obviously going to help you improve your score later, down the road. Now, how do you get financed before you go to the dealership? So one great way is to actually visit your local credit union or bank. So if you are with a credit union like hint, hint, Navy Federal, you can go to see them, and you're going to be able to have them pre-qualify you or pre-approve you for an auto loan. If you don't have a credit union, you can go to your local bank, or let's say you don't have a credit union or a bank that you feel is going to approve you, then you can go to lendingtree.com, and you can essentially shop for the best terms with no impact to your credit score. Okay, make sure to read the fine print to make sure that, your credit is not being pulled, but it should be a soft inquiry. And that way, again, you're going to know your approval terms. You can shop the interest rate and the number of months of payments. You should not obtain more inquiries than is actually absolutely necessary. You may get away with only having to pull your credit once or twice at the most. And again, your scores are going to improve faster because there's no decrease really due to one inquiry, maybe a point or two, which, is not going to kill anybody's score. Now, when selecting your finance terms, it is very important to try to select $0 or the lowest down payment possible based on the lender's requirements, okay? This is even if you have a trade-in or a large down payment, and I'm going to explain why later. You're also going to want to select the longest term possible so that you can obtain the lowest payment. Again, that's going to come into play later. Once you are pre-qualified or make your purchase with the minimum down payment, you are then going to sell your trade-in, right? So if you have a trade-in, you're actually going to just sell the car to the dealership, right? Or to another buyer like Carvana or something like that. And you are more than likely going to get a higher payout than as a trade-in, right? Because when you're trading it in, they're trying to get you financed for a larger amount. When you're selling the vehicle, obviously they're going to try to give you market value, or, there might even be a bidding on a higher amount than what the vehicle may be worth, right? Then you're going to use your down payment or that you saved up, right? So let's say you might have $10,000 saved up, or the payout from the trade-in of the vehicle or the sale of the vehicle, and you're going to pay down the loan that you just obtained. Okay, now a lot of you are like, well, why would I do all that? That doesn't even make sense. That's a lot of extra steps. Well, let's look at this example. Let's say you are approved for a $45,000 loan and you have $10,000 to pay down, either from something that you've saved or from the sale of the vehicle. Let's see how that's gonna, play out here. So you're approved for $45,000 and you have $10,000 to pay down on the loan, right? So this is, you've already purchased your vehicle, you've already got your first payment note in the mail. Now what you're gonna do is you're gonna pay that $10,000 that you have saved up to the finance company at this point, right? So what is that gonna do? Well, now instead of owing $45,000, you're only going to owe $35,000. So what does that mean? That means that you are now only at a 78% credit utilization. Now, I know that loans don't impact your credit score as much, but they can also positively improve your credit as well. And that typically happens again after you have paid down the loan enough for it to help. So just by this one move, you can essentially go from 100% utilization down to 78%, which is pretty significant for auto loans. Now, the second reason that you want to do this is because now on your credit report, you're going to have a high credit of $45,000 on this loan versus if you had just put it down in the beginning as a down payment, you would have only been approved for $35,000, right? So $35,000 is great, but it's not as good as $45,000. And if you can get approved for more, you should, right? So that's going to help your high credit. And also, if you want to purchase another vehicle in the future, you're going to get approved for a higher amount if you do want to, let's say, upgrade to something, more expensive. In addition to that, it's going to be easier for you to refinance your car in the future. Why? Because your balance is going to be much lower down the road, and you're going to not be upside down in the vehicle. So it's going to be easier to refinance that loan, or also to sell it, right? Because when you sell it, you're going to have a lower amount to pay off, and then you can receive more net profit, okay? In addition to that, you're going to be $10,000 ahead on your payments in case of an emergency, like let's say something happens and you have to ask the bank for a forbearance or a deferment of your payments. You can say, you can even bring this up, hey, I put $10,000 down. Now I just need a little bit of help. I just need a month or two or whatever. They're going to be more likely to help you in that situation, okay? And then, of course, all of this equals a better profile for your credit scores, right? Having a higher credit limit, a lower utilization, and being ahead in your payments is just going to help you out a lot more for your credit score. So this is why, trying to get approved for a vehicle should, you should think about it and follow these steps, these strategies, because it's going to help you improve your credit score. And again, it's going to have minimal impact to your credit, and you're going to be in a much better financial position in the future. Again, this is Bianca Zamora. I am your credit coach. If you have any specific questions, I'll be more than happy to help you. You can visit my website, call our office, or click the link below and book a call today. Thank you so much for your time. I appreciate it. Like, share this video, and definitely look out for more. I also want to mention that everything I'm learning here, I've actually learned through my credit mentor. His name is Gabriel Brown, Gabriel E. Brown. So I hope that you also go and look for him on YouTube. I'll actually put his website and his Linktree link as well, also for his YouTube channel. He has some amazing videos about a lot of deep credit stuff. And again, I learned everything from him. So thank you so much, and hope you have a great day.